Hey folks, welcome to the Rain Channel. Today I am joined by co-founder of REC Canada, Simeon Papailias, and we're talking real estate, what's going on in the market today, some updated news, and why as real estate investors we should be getting off the sidelines and analyzing deals, because deals there are to be had. We want to take advantage of them. Before we get the show started, just a quick reminder, please subscribe, like, put some comments in there. Let us know what you think of the show, what you like, what you don't like. But please subscribe. Let's get those algorithms kicking and we can grow this channel. Enjoy the show. Hey, folks, welcome to the Rain Channel. Thanks for joining us. Today, I have a very special guest, a trusted partner, Simeon Papailias, co-founder of REC Canada. Simeon, we're here. We're talking market updates. What's going on in the world? You're a little bit ahead of me on some news today that I want you to share, and you got it early. Kind of an insider. There you go. Welcome to the show.
Good evening, Chief. How are you?
Great. So, Simeon, just off camera, we were talking. There's good news, there's bad news. We can focus on the good news, but there's some, or the bad news, I should say. But there's some good news. So let's just talk a little bit about general. You've been in this business for a long time. You've got a incredibly successful brokerage. One of the top in Canada. Tell us a little bit about, from your perspective, when we look at the market overall, how are you seeing this kind of all unfold? I mean, we got so much going on, all bad news it seems, but you kind of got a little different view of the world. So share with us what you got.
Yeah, I mean, bad news and good news are completely subjective to their righteous owners. So, in any event, good or bad, so when things are easy and stable and the sun is shining, kind of everybody is winning, everybody's okay.
Yeah.
Whether the market is too good and peaking, or whether the market is bad and tanking, there's going to be a set of winners and losers. That's kind of where the winners and losers separate.
Yeah.
When the tide goes out, as the great Mr. Buffett says, you see who's naked, right?
Mm-hmm.
And then the other saying is, of course, all ships rise when the tide is on a high tide. So this has truly been, even in my almost 20 years in the business, this is the first time that I've seen the market test the masses to such a level.
Yeah.
To give some shining light onto the bad side of what's happening, it's very simple. The Fed had to increase rates to the point where Canadians stop spending money they don't have. The Fed gave money for 3 years, free money, stimulating the economy to get through the pandemic. We've talked about this to death. It was time to get that money off the street. It's the only way. You put money on the street that was just printed for it, inflation happens. It's what happened. At this point, yesterday, the Globe and Mail reported the inflation index at 3.1. It is the biggest, most positive marker I could have begged to see. The month before, I was elated to see 3.8. To see 3.1 now, I can tell all of you with almost certainty that the likelihood of another interest rate increase is slim to none. The job is done. Because it takes time for this inflationary period to come down. So we can expect that by January, we're more than likely going to be in the high twos. And that's now guaranteed to see, end of Q1, early Q2 rate decrease. What does that mean? Why am I talking about it? What does that mean to the investor? What does that mean to the everyday Canadian who's struggling and panicking as to how Christmas is going to go down this year, right?
Yeah.
What this means is simple. We're going to have to suffer a bit longer under the current interest rate climate. There is not a single person that I know that has not been affected by this. High income earners, low income earners, and anywhere in the middle. So I don't care how much you have, because the more money you have, the more problems you have. And when you have that many problems and you get choked out by debt, it's just the same as anybody else's problems.
Yeah.
So I want everybody to think that this isn't, nobody gets away with anything. Let's put it that way. But at the end of the day, The markers are positive, and the first positive marker that came out today. So yesterday we saw that inflation number, and yesterday was also the day that our finance minister federally announced what they're doing with a budget, where they're going, and housing was 80% of that budget.
Mm-hmm.
Give in 2025, unfortunately, of course, the liberals making promises today for a government that they don't know they have. But anyways, we're not going to go there. But making promises such as giving cheap money for the construction of apartments, this incentive, that incentive. But there was one in there that was very important to us today, and that is the removal of the stress test. So a few years back, just before the pandemic, actually, and after that 17-18 correction, the government wanted to ensure that people aren't speculating, and they implemented the stress test to make it more difficult for buyers to qualify by making them qualify at a rate of prime plus 2%. When the bank rate is at 5, there's no reason to have somebody tested at 7 or 8%. It's ridiculous. It
Mm-hmm.
actually cuts the wings off the buyer, forcing them into tenancy.
Mm-hmm.
When you force that big of a population to tenancy is why we've had a 45-50% increase in rents in the last year and a half.
Mm-hmm.
The otherwise buyers turned into forced tenants. When
Yes.
you have that many, and when you have that many tenants in a market that is short of housing, this is what happens.
It's interesting through all of this, Simeon. I think you said a number of things, of course, in all of that. Not the least of which, my view on CPIs is 3.1%, and that's coming down. But let's put it, let's kind of shine a light on the obvious. It's 3.1% on top of the already 35% over the past 3 years. So yes, it's slowing down, but prices haven't come down. And I think that's the real kind of thing we got to touch into. But having said all of that, that's more of a political statement. And ultimately, the thing is things are slowing down. We're also seeing, in different regions, we're starting to see unemployment just start to show signs of ticking up. We're seeing that as a lagging indicator, but we know that that's going to continue. So things, to your point, are slowing down, which means that rates will, in fact, probably stay lower or stay where they are, not increase, and maybe even in the next year come down a little bit. I think over the next couple of years, we'll see them come back. To an earlier point, which is if they do, in fact, get rid of that, drop that stress test, if they do, in fact, and the public get comfortable with the fact that rates are going to stay somewhere here or marginally lower, if they're going to hedge their bet, you're going to start to see people get back in the market in a more proactive way.
That's
I
right.
think there's a couple things too with this, Simeon, is that we talk about the cycles. You've been in the real estate industry almost 20 years. I've been in business 40 years. I've been through this cycle, these cycles, these ups and downs, real recessions, 3 or 4 of them over the past 40 years that I've seen. And early on, it wasn't really in my awareness to the degree that it is now, of course, at this point in my business and real estate life. All to say this: when we're at the top of a real estate cycle, we've said it many times, everybody's a genius, the sun's shining for everybody.
Sure.
When we come into, depending on the region, when we come into these slump cycles, everybody gets hammered that wasn't being smart about their investment strategy. But it's interesting how many people move to the sidelines at a time when you should actually be looking at deals. You can slow down. There's deals to be had. There's cash flow to be happening in Ontario, by the way. In Ontario, there's cash flow happening on detached units. So I
All
think
sorts.
there's stuff out there, yet people get freaked out. There is some reality, I believe, to so for some people, we're in a recession, full on. The pain is real. It's really uncomfortable. For others, it's perceived. They haven't lost a job. They haven't got their salaries cut back, but there's that wealth effect where their assets seem to have decreased. They're nervous, so they're not spending as much money, for example. So it's not real. It's a mental game that they're playing. All to say this: at a time when you should be staying in, at least looking at deals, at least paying attention to what's going on in the market, people are just out. Like, I'm shocked at how many people go, I'm out. I'm waiting for the rates to come down. Okay, well, come down to what? That's like a 2-year window probably. And you're just going to sit on the sidelines and let stuff go by. It's an interesting psychology, isn't it?
That's right. It's no different than when the stock market has a bad week and everybody starts selling off stock, and they actually turn the river the other way on their own. It's like
Yeah,
literally you're self sabotaging
yeah,
as opposed to being patient and understanding the market dynamics. Emotional investing in stocks, emotional investing in real estate is the same. Um, People don't understand. Most people, I shouldn't say people, most people simply don't understand the difference. So somebody's saying I need the rates to come down. How about you play with the other factor, which is the price? Because you can right now. For the
hmm
first time in 2 decades, you actually can.
yeah,
So you can create the deal that is favorable instead of waiting and being a victim of the circumstances. Meaning that I believe, and I believe this very much because I am on the street. I live this every day. There's a cool 30, 60, 90-day window max
mm
before buyers return to the market.
mm.
I think the bottom is now into January 15th because
Okay,
Christmas slows a market down to begin with, just because people are eating turkey
yeah,
and buying gifts and can't afford to do anything, and they're looking to make changes and all the things. So the Christmas effect this year is going to be further exasperated by a high interest rate environment. So it's going to be
yeah,
slower than ever. But what does that mean for people who need to sell? They're just sitting there on the market, boiling in their misery. This
yeah,
is the time
yeah.
that a great investment focused buyer agent is going to go ham, is going to go to town working hard for their clients to secure deals instead of 5% off market value at 15, 18, 20% off market value.
Well, again, you were sharing just off camera. We were having a conversation, and you were recently at an event where there was buyers doing deals. You had a contractor, a builder, whoever that was going, okay, listen, here's a bunch of incentives. We want to get this building finished,
Right?
completed. We want to move forward with it. Listen, do what you got to do, but here's the deals. And when you look at investors who are actually paying attention, they're looking at those deals and go, gosh, that's like a no-brainer. Why wouldn't I take advantage of that conversation or advantage of that opportunity?
That's
Those
right.
opportunities didn't exist a year ago, 2 years ago, for sure not. And now here they are. And they're it is kind of like when there's what is it, blood in the streets, blood in the water, whatever the story is, right? It's like the sharks come out, and this is the time where there's money sitting on the sidelines that's also going to start to move into the market, given what's happening.
And it is like I
It,
have
it,
a half a dozen small REITs
yeah,
that this is what they've been waiting for. They've been sharpening their knives for years, waiting for this moment.
yeah,
All those the people we used to call doomers and gloomers, this is when they're I was right, the market has come down. so
yeah.
so the truth of the matter is I have mandates on my, like, I personally as a broker am doing deals, and I'm
Mhm,
not saying that to impress anyone, but rather to impress upon everyone that there is a market for everyone.
mhm.
And the people who make their moves like sheep when everybody else is are the people who get hurt first because they don't understand the dynamics of why they invested in the first place.
Yeah.
Uh,
And I want, if you're watching this, we're not looking through a set of rose colored glasses. We're in the trenches. We're seeing it. We're in business. We know the pain. We know the discomfort. We've got staff. We've got teams. We understand what goes on a day to day basis in people's lives. But as investors, when we, really step back from it, it isn't about looking at it from rose colored glasses. It's looking at going, okay, these are the opportunities that present themselves, and we have to see these downturns, these slump cycles, as those opportunities to take action, to connect with guys like Simeon Papailias or his team, who are really connected in that space, or to continue to hang out with the rain and the rain community, so that you're surrounded by like-minded individuals who are all going through the uncertainty and the confusion of the market. And so I'll leave the last kind of words of wisdom to you, Simeon. But if you're talking to investors today, whether it be in overarching Ontario, or even in a market like Toronto or GTA, what kind of guidance are you providing?
right now, my message is super clear. Right now, this is the time to work as an investor. Whether you on your own, or you and your agent, you and your lawyer, you and your accountant, it is a time for patience and prudence. but it is definitely the time for action.
Right.
So collect those beans that you do have, and take a look at what options are best for you. Are you looking at a GIC security for 4%? All of a sudden, 4% is such an amazing return for everyone. Is that right? Because a couple of years ago, 20% wasn't enough for anyone.
Yeah.
And all of a sudden, 4% is like it's the best thing since sliced bread. So
Yeah.
let's be truly honest with ourselves. Right now, for the first time in my entire career, I can take a buyer and put in 20 offers in one night and get 3 or 4 signbacks at prices that you never in your mind that will blow your mind.
Mhm.
Stop looking at the interest rate. The mortgage is nothing but a tool investors use to facilitate a return on an asset. And that is what is changing. The price that you buy the price you pay for a property will never change. It is the only fixed item. In 99.9% of real estate deals, the money is made on the acquisition, not the exit. Because there's many exits.
Yeah.
So my advice to every member of your amazing audience is really give your head a shake and think of what you should be focusing on over the next 4 to 12 weeks. It's not sitting on the sidelines. It's actively analyzing deals on the market that you can potentially pick up with a VTB. Don't assume that they're going to say no.
Mhm.
Don't ask, you don't get.
Yes.
So
Exactly.
this is the time to pick up the deals you never thought in your mind were possible. And if you need help
Beautiful.
with that, we're here to help.
Beautiful. Simeon Papailias, thank you so much. Agree 100% with you. And when it comes to interest rates, that phrase, "this too shall pass,"
Yeah,
comes into play.
100% it will.
So, Simeon, thanks for your time as always.
God bless you, my friend. God bless everyone.